Everyone is wrong about crypto in 2025, and I mean it. The crowd is wrong in a huge way that will result in a lot of traders and a lot of investors getting caught with their pants down, which is never a good time, is it? Over the next couple of years, things could get a lot crazier than people think, but the clues are all there for anyone who takes the time to look around. Plus, good old-fashioned market psychology is actually offering up some pretty interesting hints about what's really going on under the hood. So let's get into it and look at how and why everyone might be wrong. So first, it's clear that the crypto goalposts just keep moving. And what I mean is that this cycle has been a little bit off kilter. Things haven't gone as planned with the 4-year cycle. People have been calling tops the whole way through. We got new highs before the Bitcoin halving. The game has changed. The cycle top was supposedly in early just because the ETFs launched and nothing could beat that, right? Well, then it was, new all-time high in March 2024. Well, that was going to end the cycle. It was over then. Do you remember those calls? I remember those calls. Then it's because, Trump got inaugurated and the Trump pump is over, baby. It's all done. Trump tariffs are here. We're going to zero. Okay, 100K, we need to pack it up because that level is the psychological barrier. Then 120K, that was the top now. We see this reason and that reason. Of course, all of those calls have been wrong. People keep fading what's happening. The institutional bid is here. Now, we could discuss at great length why everyone has been so cynical this time around. I think a lot of it comes down to PTSD, deep scars from the FTX and all the other scams that happened in the market in 2022, which was especially harsh. Or maybe it's just a generational shift from early Bitcoiner and ETH head years, which had a lot of optimism for the cryptocurrency space built in, and now moved to this financial nihilism of meme coin insanity. Even the previous cycle's NFT wave was characterized by at least some good vibes, man. People generally having some kind of fun doing weird things. Now what? What's the dog of the day, man? It's just a theory, but here's the point that matters. Whatever the reasons for the pessimism have been, the doomers have been consistently wrong. Remember, life's electric, life's a vibe. Screw the doomers, man. Don't let those bearish vibes into your life. Plus, this is where market psychology comes into play. If the crowd is certain of one particular outcome, guess what? It becomes a lot less likely that that outcome will play out. Somebody has to be offside, and it's usually most people who are offside. Bull markets seed when the consensus is doubt and disbelief, just as bear markets emerge from greed and euphoria. So then, what is the crypto consensus right now that everyone is wrong about, and what is the contrarian take? Well, before we dive into that, guys, there's a reason that traders keep coming back to Femex. They know how to take care of business and how to reward traders. Right now, if you deposit $1,000, you're gonna get $200 cash back. You go bigger, $10,000, $999 back. $15,000, $1,299 cash back bonus. That's crazy, man. On top of that, you're also getting an instant VIP upgrade to VIP level 2 when using this link right down here in the description exclusively. You'll slash your fees by 50% on spot and 40% on futures trading. By the way, Femex is available to anyone, anywhere. That's you. You might need a VPN in some cases, okay? This is a limited time offer, so hop on board. Link down below. If you're a serious trader, don't sleep on it, okay? Okay, so back to this topic here. Right now, basically the most widely held view is that we top in or around October of this year, which I think will be a local top for BTC, 150K BTC, some maybe get 7K ETH. We'll see, but that's going to catch a lot of people off guard because that's the 4-year cycle target. That's the top of tops, right? And sure, look at the cycle so far, and at first sight, there's a strong case for that prediction. Okay, but that misses a key point, which is that we've only got limited previous data to draw on. Bitcoin is now incomparable to the coin that was changing hands almost for free back in its earliest days. ETH and its ecosystem today are nothing like ETH back in 2017. And even if you just look back to 2021, there has been enormous development around Bitcoin, DeFi, stablecoins, the institutional bids, and actually the whole of crypto over the last 4 years has changed dramatically. The ETFs are here, the treasury companies are here, the regulations are here, the Genius Act is here. Crypto's going mainstream, baby. 401ks for crypto's nuts. So what I'm talking about here really comes down to the idea that crypto is an asset that is in its maturation phase. Basically, this is it. We're here. Bitcoin made it. We're going mainstream right now. It's happening. ETH is following close behind, with the rest of the crypto industry being dragged up by those leaders. The crypto industry as a whole is locked in, and it's here to stay. It's no longer uncertain about the future. It's absolutely certain. It's becoming part of mainstream finance. But just sticking with Bitcoin for a moment, as that's the leader of the whole industry anyway, BTC is now a global macro asset. It's comparable with gold. It's the 6th largest asset in the world by market cap at the time of recording this video. It's outpacing the QQQ index, right? It's the underlying asset in the fastest growing ETF ever, which is BlackRock's Bitcoin ETF. It's on corporate balance sheets. It's soon to be in your 401k. Countries are starting to buy it. You get the picture. Then there's ETH. Now, maybe you saw that the ETH ETFs received over $1 billion of inflows on Monday this week. That's a big change from basically hoping for $1 million day back in January or February when Wall Street didn't give a crap about ETH. Suddenly, BlackRock's ETH-A became the 3rd fastest ETF ever to hit $10 billion in assets under management after the top 2 Bitcoin ETFs. Plus, as with BTC, we've got treasury firms now buying. There's now 9.9 million ETH locked up in treasury companies and ETFs combined. That's over 8% of the total supply, worth $46 billion. Keep in mind, too, that 1 in 3 ETH are currently locked up in the staking contract. ETH is now the 22nd largest asset in the world by market cap. Crazy stuff, right? So with Wall Street interests and an SEC that's now committed to integrating crypto and bringing it into mainstream finance, and a president of the most powerful country in the world being the most powerful financial influence in the world now, shilling crypto regularly, we're going to go higher, guys. With pro-crypto legislation passing in the USA, crypto is now in uncharted waters. We are in the big boy phase now. And I mean in the best possible sense. We are in the asset maturation phase. So with all that in mind, it just doesn't make that much sense to think that crypto just can continue to follow slavishly along with this 4-year cycle idea, as it did when it was an isolated asset class. Now, it remains to be disproven. You have to keep that in mind. And if we do get a 150, 160K top in October, it's going to catch a lot of people off if we go higher in 2026. We had a much smaller total market cap back then, and pivoting to long-term swings around the Bitcoin halving, when there was still a lot of Bitcoin still to be issued, it all made sense. But unlike now, 93% of the supply has already been mined. The ability of miners to dump in the market and affect the market is diminishing. Old whales are capitulating and selling, taking their profits and running away. This all suggests then that we need to treat crypto as more of a mainstream tech asset and a financial industry in of itself that will more likely follow along with the stock market, and consider the likelihood, whether you want to accept it or not, of an extended crypto cycle. Looking at all the markets in the broader macro landscape, we could be in for a global top next year, and that's more relevant than ever for crypto. Maybe it comes in Q2. A lot of people have been talking about Q2 2026. Not everybody. It's far from consensus. As pointed out next by Alec Kruger, these Bank of America charts show that investor sentiment, along with fund manager deployed cash levels and equity allocations, are definitely in bullish territory, but are still far off the extreme levels that are seen in previous market peaks, like in 2021 and at other moments before that when the markets hit peak euphoria. So we are in the build-up phase during which fund managers are positioning themselves without yet going all in. But if Trump pushes the Fed towards aggressive easing, which is exactly what he's doing, we should get rate cuts in September because labor markets weaken, inflation's cooled, and he's going to put a new guy in 2026. He's clearly looking to get rid of Jerome Powell, appoint a governor of the Fed, a Fed chair that he approves of, will bring interest rates down dramatically. Then the liquidity that flows into the markets as a result could propel us towards full bubble territory in 2026. Remember the key point. Crypto has come in from the cold, especially Bitcoin and Ethereum, meaning that institutions can now buy into it. The water's safe. Everybody's jumping in. They're driving the hype. The main characters are people like Tom Lee, Wall Street legend, buying $25 billion worth of Ethereum. So we are now in a risk-on environment for crypto, perhaps more than ever before. We are best positioned to ride this bubble. It will be a bubble. It will pop at some point, but the popping probably doesn't come in October. Again, local peak, sure. That's going to catch a lot of people off guard. The move back from 150K to 110 is going to break everyone's brains, but you'll be ready for it when it comes. Okay? And the likelihood is that we will continue pushing with global M2 and rising liquidity and easing rates and the business cycle continuing to expand and all that stuff well into 2026. Maybe all this data is wrong. Maybe the 4-year cycle wins. We're going to find out by the end of the year, but be open to other possibilities. Okay? I don't have a crystal ball. You don't either. No one knows exactly how it's going to play out. But if you look at enough of the data is saying that things may be maturing. It's not to say this time is different, because this time is kind of the same. The asset maturation phase. Interesting. Thanks for watching.